Hello gents. So I had a massive scare this week. So as you all know, my data is my prized possession, and Jesus Christ, so I was separating my data from my higher time frame setups and my lower time frame setups, and in the process I somehow lost all of the lower time frame data. Long story short, I managed to restore it and I got it back. But my data is now split up. So before it was all in one database and I would analyze it as a whole, put on filters and see the results. Now it's actually in separate databases. So each of my setups are in completely different databases, and holy shit, it has given me such a big insight that genuinely the win rate on my lower time frame setup is about between 40 and 50%, depending on the confluences, let's say. Like that's just generally, like in total. You can increase it by adding different confluences, but it's generally around 40-50%, which is fine. That's a completely fine win rate. The profit return on that is next to nothing. Like it was almost flat. Genuinely, the risk reward was almost flat. The win rate was almost flat, is in near 50%, and the return was almost zero. Like, even though I was winning more trades, or profiting, let's say, how do I explain this? Basically, long story short, the profit return on the higher time frame setup was so much more than the lower time frame. Even though in my head, the lower time frame, the win rate was fine, everything was playing out fine. Like, if I had the right confluences, the win rate would go up to like 60%, but still overall the profit return based on the risk to reward, etc., everything was just completely out of whack. So in my head I was like, okay, on the lower time frames there's more opportunities, and there fucking is. There's more opportunities to lose. So think about it. If we want to have simple rules, which we do, we want to have everything as simple as possible. We want to have literally like 1, 2, 3 rules, max 4 in my opinion. But let's just say we have something where we're in bullish market structure, we want to be buying near a swing low. So we want price to come down, this somewhere in this area generally is where we want to be buying. So price comes down, and then we want to wait, let's say, for a structure shift. So we're putting in structure points here, lower highs, then we want to wait for a structural shift. It's super simple. Like, that's literally, okay, I want to be in the higher time frame structure, and then I want to wait for confirmation. So I have an area of interest and I want to wait for further confirmation. That's pretty much all trading strategies. That is the same on the 5-minute chart, on the 1-minute chart, as it is on the 4-hour and the 1-hour chart. Oh my god, my profit return is so much higher if I'm just waiting for the same pattern, but on the 4-hour and the hourly, utilizing this. Let's say this is the daily bullish, so we want the daily to be bullish, and then the 4-hour to also shift bullish. So having the weekly, the 4-hour and the daily in line is so much better than having the 1-hour, the 15-minute and the 1-minute, or the 15-minute, the 5-minute and the 1-minute, let's say. Like, it's the same setup, the same principle, the same simple rules, but it's so much more profitable on the higher time frames. And I know that does mean that we then have to hold trades for longer, but is it not worth holding trades for longer if it's going to return us more? And again, from my own data, it has proved astronomically, if that's the right word, greater on the higher time frames. And even just from a whole psychological perspective as well, I actually feel so much more comfortable in the trades. I don't get beaten up by a loss at all, because these are my rules, they're higher time frame areas, it's not subjective, therefore I'm taking this trade. Compared to the lower time frames where it's like, okay, there's a couple of areas here that I could mark out as my area of interest, let's say. Yes, we can still mechanicalize our rules, but at the same time, I always still feel a little bit after a lower time frame entry, because I feel a little bit guilty, and maybe part of me is like, I shouldn't be trading this because it's too low down. And again, I have had a lot of success on the lower time frames, but not consistently. I've never been able to carve it out consistently, and the data shows the same thing. Like if you look at FTMO or any of the prop firms' results, the people who are consistently profitable, let's say over a year period, not getting one big payout, etc., it's upwards of 70% of them are higher time frame traders, swing traders, or not lower time frames anyways, let's say. So the data backs it up. The national data, or not the national, the general data from the prop firms backs it up. My data backs it up. So if you are struggling, give it a try. Just think about potentially switching to the higher time frames. I will try and remember to I've got a full mini course on how I trade the higher time frames. I'll try to put it in the description. Cool. So yeah, that's the main thing I want to cover, is like having simple rules, but then just utilizing the higher time frames as applying those rules. Again, we can go deeper, double click on it in the future, but just think about your rules. First of all, think, how can I strip away anything? Like, is there anything I can do to simplify these, make them super clear? Because the rules determine our data, and the data is so important. And it's not just general data, it's important stuff. It's what are the three, let's say, again, I'm just picking an arbitrary number, but the three hypotheses that I want to test, as in, is this setup better if the daily, the 4 hour, the weekly, the daily, and the 4 hour are in line? What's the difference if the daily, the weekly, and the 1 hour are in line? How much of a difference is my win rate if I'm waiting for a 4 hour break structure versus a 1 hour? That's objective. We can actually test that. We can sit there for fucking 2 hours and get 50 data entries on that, and then know whether the 4 hour or the 1 hour has a better entry. Stuff like that. Let me think of another example. So if you use EMAs, if you wait for a specific EMA crossover on the 1 hour or the 4 hour, it has to be objective. It's like, this is what I am testing. And then other confluences such as like market behavior, like did we have sideways behavior before we had the reaction? Did we have volume into the low, into my area of interest? Just start tracking these actual tangible things. But again, thinking of data as we're running an experiment. We have a general hypothesis, and then every trade is a mini experiment. It's another data point, because it's data. But it's not just gathering fucking what time do we enter, how big was our stop loss. It's stupid. It doesn't do anything. Like, we have to use the data. We have to actually sit there and think. If you have someone's journal that you've taken from online and you're just fucking inputting their data and you haven't changed any of the columns to be your own, you're wasting your time. There's no point. You're not actually learning anything. So sit there, pick a couple of things. Start with one. Just start with one thing that you want to then objectively test. I want to see if this makes an improvement or a disimprovement, that's the word, to my trading. That is your first hypothesis. Run a back test on it. Get a fucking blank spreadsheet and run a back test. Ran over. Guys, have an amazing week. It is Friday. I am just waiting for my, I don't know if you can see this, GBP NZD, which I entered in on Monday. Is so close. That's my analysis. So close to take profit now. This is that time where it's like, okay, every fiber in my body wants to close this because it's so close to take profit, and this can reverse. But that skews the data. We have to just let the data play out. 3-to-1 minimum risk reward now is what I'm going for every single time, and yeah, I'm cushy in this. So let's see. Nice end to the week. This is take profit, and lots of opportunities for next week. Have an amazing week, dudes. Catch you in the next one.